Hey traders, Raghee here. Great to see everyone. Happy Wednesday, everybody. Welcome to Charts and Coffee for July 14. All right, let's get to it. Got a lot to take a look at, most of which is happening on the economic calendar. So let's go ahead and kick the conversation off there. What is going on with the calendar? Well, this week, everything is about the calendar. So think of it this way. There are really three ways that I think the market is going to be compelled to get in, get out, make significant decisions about their trades. And ultimately, what we have to remember is that when we are looking at the market from a technical perspective, right? I'll be looking at, say, the S&P, double green uptrend, fully stacked EMAs, right? Propulsion dots, green grab candles, et cetera, et cetera. The calendar is going to go, oh, cute. Your secret squiggles, that's what I call indicators, including my own. Oh, cute. Your secret squiggles have that to say. Well, as they say, what's that joke? Hold my beer. Noon, we have Jerome Powell. Jerome Powell doesn't care about the 200-period exponential anything. Doesn't care about my grab candles. Doesn't matter what the market has done up till now, because based on what Jerome Powell, as I like to call him, Powell, right, says between today and tomorrow's testimony, the market's going to understand the framework for yesterday's CPI, today's PPI. The macroeconomic reality is it's whatever the Federal Reserve says it is. I know that's not what you're going to hear. I know that's not necessarily what you want to hear. But because they have their hands on the levers and dials of monetary policy communication, the actual monetary policy, asset purchases, money printing, etc., that is in some way near-term true. Now, longer term, the tectonic plates of macroeconomics, yield for nobody. But they're huge macroeconomic plates that take a long time to move. And eventually, maybe those things will be proven to be right. But for now, just trade what you see. Okay, what we see, so we have Powell, who is typically a friend to the market, unless he misspeaks. I hope he does. All right, let me say that. I hope he does. I hope that he puts his foot in his mouth, or I hope that the market misconstrues something that he says, because that's going to create a pullback. That's going to create a retracement. Now, yes, it is a squiggly little line between what's a retracement and what is a reversal. For me, that squiggly little line within the context of an uptrend is the 34-period exponential moving average on the low. Sometimes it might be the 55 exponential. Depending on whether or not the propulsion dots are lit up and whether or not on previous pullbacks, the market respected what was happening with that 55. So there are a number of uptrends in this market. I don't suspect Powell's going to, purposefully send the markets lower. And I also know that the markets, the equity markets, the risk appetite corners of the markets, they might be strong in the morning. They might rally. Remember that 9:30 is the true opinion of the market, not the pre-market. And that going into that noon event, and as the European markets close, and as we go into the typical rhythm of the day, midday doldrums, the market might, again, equities might just sort of get flat, retreat a little bit, just in preparation for what it is that Powell could say during, again, 2 days of testimony. So I hope that gives you some framework for what I am doing. I'm still very bullish. I'm going to talk my book just for a moment. Our current longs are XLV, TLT, and USO. All right, those. So when I say our current longs, those are trades that we've been discussing both in the futures room and in the Sector Secrets Mastery. And just to give you some background, because where you get long matters, right? Where you get short matters. So these are just trades that have been on for a little while. They're not brand new trades. I'm looking forward to putting on some brand new trades. I mean, although you could look at USO, it's fairly recent. That was our window for USO. So we've been long for a minute, right? So if we pull back a little bit, it's not really a big deal. We've already hit targets, actually now our second, and this is, clearly well above any kind of break even. All right, well, what about TLT? Again, if you've been following along with the 1, 2, 3 pattern that I talked about back in March, 1, 2, 3, right? Or sorry, 1, 2, 3, there's your breakout. This has been a market that's been trying to organize into a double green for quite some time. And you can see whether you're looking at ZB, which frankly, that's what I'll look at to trade TLT. This is just a longer term uptrend that I've been in now for a little bit. Now, is this at some point going to pull back? I sure hope it will. Yesterday in the premium or free video, I can't recall, I talked about a concept that a lot of trend traders have to accept when they become trend followers, buyers of the dip. Sometimes the most bullish thing you can be is a near-term bear. I am rooting for the bears, right? Even though I want to be long, I'm rooting for the bears. You guys remember that scene in A Few Good Men where Tom Cruise is talking to Kiefer Sutherland's character? I love that movie. Aaron Sorkin screenplay, fantastic screenplay. So Tom Cruise's character is talking to Kiefer Sutherland's character, and Tom Cruise asks him, is there something you don't like about me? Have I done something to offend you? And I'm speaking loosely, but Kiefer Sutherland's character says something like, he was a Marine, Tom Cruise is in the Navy, and he goes, no, we love you, Navy boys. You always take us where we want to go. I kind of think that way, and why I root for the bears. They are going to take me where I need to go, which is that pullback, that retracement within the context of the trend. So I am a fan of the weakness if we happen to get it. If not, so be it. I'll continue to focus on the long side of those double greens. All right. So with that being said, that is, that's the mode I'm in. That's the outlook that I'm in. We've been saying this for a while, for weeks here in Charts and Coffee. Double green. Please don't fight it. If you're looking to fade anything, try to find the yellow. Try to find the yellow corners of the market. Try to find the markets that are in chop and could fatigue. Notice that, not so surprisingly, the Dow is struggling to move higher. And why is that? And we talked about this in depth in the futures premium video last night. So my futures folks, if you haven't checked that out, do watch it. My sector secrets folks, we're going to do a deep dive into it. The components within the Dow are markedly different than the components within the NASDAQ and the S&P. Not that they don't share some individual stocks and sectors, but NASDAQ and S&P have more in common than NASDAQ and Dow, even S&P and Dow. So when I look at the Dow and I look at what's happening to industrials, and industrials, XLI, they're going to be absolutely affected by the transports, the IYT. This is Dow Theory 101, right? Those of you that are fans of Dow Theory, apart from the market trend, the market cycles, and the adherence to volume, another one of the 6 Dow tenets, one of them is to watch the transports. But transports are absolutely going to affect the industrials. So, keep in mind that transports industrials are going to affect the DIA, but that when you think about what's in the Dow now, financials and tech, industrials aren't even a top 3 sector in terms of weighting within the Dow. But I do suspect it's going to lag what's happening in S&P and NAS, because the corners of the markets that are in fuego right now are tech and healthcare, by the way. All right. So, hey there, James. I've heard you mention rate hikes or something about 50 basis point hike, not drop, hike. So what does that mean for 2023? So the Federal Reserve is preparing the markets for an eventual rate hike. And there's going to be sort of a rate hike that precedes that, which is the taper. Taper is on a rate hike quite literally, but in terms of the effect on the market, when the Federal Reserve stops purchasing the long bond, in other words, purchasing the long bond is designed to keep those rates down. So by keeping the buying pressure on it, the yields are kept in that way sort of artificially low. And so they're going to stop the pace. They're not going to stop asset purchase altogether, but they'll taper asset purchases. So instead of the 60 billion per month, it might be a little bit less. We've seen taper before. Take a look at charts back in 2013. But yes, that the market is right now thinking about what's going to happen in 2023, data depending. So it's 2 rate hikes, 2 25 basis points or quarter point hikes that the market is anticipating the Fed is trying to track towards. All right, loving the automation you put into my trading. My pleasure. Again, I don't do it alone. Huge thanks to Lorna. Huge thanks to Trish, and here helping me out here in my office. So now developing the discipline to wait for my pitches. Gosh, I'll tell you what, PH. The easiest way to develop that discipline is to accept something that everybody needs to accept, but most definitely if you're as selective as I am about what you're going to swing at. Not every move in the market is intended for me. All right, I write that down. I used to write that down every morning so that I don't get stuck in the fallacy, the rabbit hole of missing trades. Not every move in the market is going to be intended for me. In other words, my tools, my rules, my time frames, my time horizons, my indicators, right? They're going to deliver very specific opportunities. Again, the pitches that I talk about. And so one person might get an opportunity that just isn't visible on my radar, on my tools. And so the way that I develop that discipline is just accept that, hey, just because a market made a big move doesn't mean, I've been getting a lot of questions about Disney today. The most honest thing I can say is that move in Disney did not even ping on the radar for me. I'm sure for somebody it was a wonderful trade and I'm beyond happy for them, right? But there's nothing there for me to do. That pitch was sort of high and away. It's not something that I can swing at. And that's how I've developed the discipline over the years, just accepting that truth. And then I can be in more harmony and less animosity and less adversarial with the market. It's not out to get me. It just does what it does, and hopefully it does something that works for me. Hey there, Francisco. When can we expect the update of 3.0 and multi-JT? I'll check with Lorna on that. If it's not there now, it should be soon. I mean, super soon. I'd say this week or next, if it's not already there, but I'll have to check with Lorna on that. Thank you for asking, by the way. I am going to have more of the tools that I use on TradingView going forward, for sure, going forward. Okay. Hey, Francisco, Lorna did answer you in the chat, so check out the chat. She did reply to you. All right. They're both done and ready. You need to contact support at simplertrading.com to gain access. Okay. All right. Thank you. Thank you. And next up, Andrew, I can't believe it's Wednesday. I can't believe it's July and the latter end of July already, my friend. I cannot, we just finished up, by the way, our big day trading class. Thank you for those of you that attended the playbook. We still have the Q&A, the big Q&A that I release when the class is done, and the updated chart book, the expanded chart book to accompany the live trading and the slides from the class. So, kind of wrapping that up. And funny enough, Trish and I are gearing up for our next conversation, which really is such a great follow-up to the day trading playbook, which is, what do I do with the rest of my day? Okay, Rod, got it. You trade the first 2 hours of the day. Then what? Golf? Sometimes. But actually, I start scanning longer term time frames for swing trades, which is, what we do in the Sector Secrets Mastery, by the way. That's a big part of what I do there. So what is it? It's simplertrading.com/sector for those of you that want to join our think tank over there. But that's what I do at the second half of the day. And we'll be talking more about that come, I think, August. So really excited about that. Yeah, so I can't even believe we're wrapping up July. I feel like we're almost wrapping up July. All right, so Dan says smashing the like button. Thank you very much, Dan. Smashing the like button. I love it. I love it. Thank you. Thank you. All right, so next question. Hey there, BJ. Do I have a course that shows how to use the indicators I've offered on my chart? BJ, yes, it depends on how you want to trade. Day trading, end of day trading, what your preferred time horizon and time frames are. If it's short term, I just finished that playbook class. And if it's slightly longer term, you might want to check out what I do in the mastery. Just depends on what your objectives are and your preferred time frame. Okay. All right. Next up, Ravi asked TLT and big. Okay, sure. So again, had a lot of questions about TLT yesterday. This is a long position that we've been talking about in both the sector secrets and the mastery that dates back to the 1, 2, 3 pattern that completed in March. All right. So please know, this is just following through on a plan that was already confirmed by a 1, 2, 3 breakout, 1, 2, and actually on the ZB futures. And then we've organized above the wave, we've organized into double green. And so now I'm just buying dips because that's all I can do. That's all I want to do in a double green. The movement lower, like yesterday's, is going to be an opportunity, an aggro, but an opportunity all the same. Until we go yellow or double red, I'm actually not allowed to short. Could the market head lower? Of course it could. And at that point, I'll be stopped out. There's always that one last trend trade. This is another thing that trend traders have to accept. We could follow the trend on 2, 3, 1, who knows how many pullbacks. But at some point, the market will transition into chop, and that chop could then culminate into a downtrend or even a wider chop, which ultimately could stop me out. But in the meanwhile, I'm not going to look at moves lower as a reversal. I'm not allowed to within the context of double green. That means that even though we might have a top in place, I don't know, but even though we might, I'm going to continue on with the approach that is my rules of buying dips and double greens. It's worked really great on the indices, right? So let me just at least give you some insight. It's worked really great on indices. It's worked really great on the SPYs and the Qs. But I had to stop doing it on the Dow. You see what I mean? There's your transition. The Dow is actually flirting with going back to double green. But notice that time on the second row of the JT multi that went yellow. That's where buy the dip, not so much the main goal, right? So I let the structure of the market, a la Charles Dow, dictate what it is I can do. All right, so there's TLT. And then finally, BIG. So BIG is not a name that would end up on my radar for a trend follow. However, since you asked, although this is likely not something I will do, but here I've got my Darvis. I've got a Darvis signal in here. I'd say somewhere between where this VWAP is, which is your first of the year VWAP, Darvis right here, and the 200 exponential below that, I'd say somewhere in this area around, say, $60 to $59, even $58, you're going to have a support level, hopefully an oversold support level. And one really effective way to confirm that would be with a ready aim fire or a slow stochastic. As you want to see that oversold. Now, why oversold? Well, look at the trend that preceded the chop. And we've been chopping since April. Let's keep that in mind too. But the trend that preceded the chop was up. That means that if someone said, well, Rog, will you fade the upper end of the range? Not really the primary, although it's valid, the primary goal would be to focus on the trend that was, and I would prefer to trade in that direction. So that's your BIG. This would be a fade. This would be what we call a distribution fade. Distribution is the market trend. Fade is the strategy. Okay. All right. So, gang, just like that, I cannot believe the 20 minutes just flew by. So as always, thank you for the questions. Thank you for being here. with me for Charts and Coffee every single morning, 9 a.m. here at the Simpler Trading YouTube channel. I'm going to head on over to the mastery. I know some of you are going to head on over to the futures room or to the options room or whatever mastery you are subscribed to. Check out simplertrading.com. Check out the memberships. We have a lot of different masteries, many different rooms. You can find the fit that's right for you. All right, gang. Thanks for being part of the community. I'll see you mañana.